What's up, guys? You know what I noticed a lot is these ranges that form exactly at these times. 48, like the 48 minute, 48 minute. What the fuck? Sorry, guys. 48 to 10. So I want to look for these ranges to scalp. So if we even just go back right here, right? 48 and 10. Usually I don't put a vertical line. But anyways, you're looking for a high and a low. So a high and a low after the range. So 10, sorry. Oh, so this is actually the low, which is even crazier. I like this a lot. So this shows me that we should be bullish for this minute that's coming and the next range. So I'm looking for like bullish price basically here. See if you get it, little double bottom, and now a sweep of that. So now it looks like it could do something. But look, we have another range forming right here. So there's another macro. You also got to take a look at the time. This would be like New York session right now. This would be about to be the end of the New York or London PM's kill zone or whatever it's fucking called. But it's going to go to lunch hour basically soon. So I'm looking for a high and low in this range. Perfect. Boom and boom. We could take this one off now. But we still have this liquidity. We have this liquidity. And look at that. Double top and liquidity that fell short right here. So I'm looking for long. I would like to see this swept. And what we could also do is do something like this. Like if we really move against it, we could look for something like this. Boom right here. Look for a tap on there. And then we go to the second chart. Okay, look, sometimes you don't get a trade. And this would be something where I would like test out, see if like maybe we can even return over here to that 50% and then could maybe go to this level. So whatever. See. Take a sip of this coffee while the next range starts. All right, so look, we have another range right here. So this is if you still have this bias over here, let's say this is the range, right? Ends at right here. So we have this very small tight range right here. Okay, range ends at 10. And look how immediately there's going to be a pullback right here. So I'll put it right here. Pull back, and then we, like we said before, if we're expanding like this could also be a good level to go off of. All right, so we end up reaching for that draw right here, and this is where you can look for shorts. So we can go to 15 minute right here. Since we've been going up so much, this is an easy draw for me. So it looks like we're literally going up as we speak. So I'm gonna turn this and put it to like 5. And then we're just looking for a bounce and a fair value gap. See, so the market is dipping down super low. I'm gonna see the 30-second chart now. All right, we're looking for a drop over here. I wish you could like set a limit on these things, but all right. So we literally do not get a bounce. So we were on the 15-second chart. You saw market structure shift. It went down into this. Like, yeah, you can go into the 1 minute and trade this. If your heart's desire. But it's like this is like very small sweep. So I'm gonna just wait until the next macro because that's the model I'm trying to teach right now. But So something like this, like it moved like so far against you, you could just wait for a next macro. Next macro, okay, so look right here. Looks like it could now start sweeping down. Yep. So now you could go down into this and play it, but right now I want to wait for the next macro. So I'm not trying to FOMO into this. And this is how you can even replay like and test out the stuff. So we're gonna go 10 seconds just to go speed it up. Trying to go to over here. All right, so look, we have that. We got this range formed right here. So now we could see 50% being as a target, and that would still go in with the market structure shift, this market structure wave right here. So 50% is a target. You can go to 15-second chart. You can even do the 10-second chart. 10-second chart is probably ideal for 1 minute. It really shows like this is huge range. So it's like, I think it would be pretty ideal. Let me lower this down to this. And now we're looking for a bearish market structure shift. So let's say we wicked. We should come down now if we're going to have a market structure shift. Oops. Let me take this off. This new trading view you gotta get used to. All right, so I went in short right here. So this is not really, I'd want, yeah, 100%. Okay. So we're already 1 to 2. Usually I would go for 1 to, I mean, we're already 1 to 1. So usually I'd go for this much. But usually I would actually be in short right here. So I want to be realistic. I would usually be in short right here. I'm gonna be realistic. If I was doing a limit entry, I would put it into the first fair value gap right here. I wouldn't have put it over here. And I definitely wouldn't have gotten filled up here. So I'm trying to be transparent. I would actually look for this. And I don't care being stopped out. And I like moving, oops, okay. Setting in short right here and moving this down. I shouldn't have gotten short so much, but moving it down, moving your stop down. So I'm adding into my losers or winners, sorry. I like doing that. See right here. Eventually, if you get a bigger drop and then a retrace, you could put your stop up here. But I wouldn't put it, it's a little too close for me. I want to actually see the market move with me before you actually enter into more positions. That's personal preference. You see, this is why I moved my stop down. I don't mind getting stopped out because I'm building good habits. Because look, you risk 100 from right here to right here, right? And then it drops down, and then you risk another 100 from here to here. Your stop loss goes to like, let's say maybe 150, 140, maybe 160. But then your take profit, which was down here, doubles. So essentially, you're reducing your risk and you're just gaining more profit. You know what I'm saying? So it's like I like doing adding into my winners instead of losers because you can enter in right here and then it goes to up here and then you enter in $100 more, thinking that it's really gonna double top or something. You feel me? Like I don't know. With ICT, I think it just makes more sense to add into your winners instead of losers, especially. I don't know personally, but it just like destroyed my position. So I'm actually just gonna go to the next day. Guys, note that I actually did a sweep over here, so of this range. So if you're just playing the range and not 50%, you know, of the range, you would be most likely in a short right now. Yep, you would be in a short right now. So market is you would be in a short actually from here. You would have been adding into your winner right here. Let's see if it goes with you. Sometimes you get losers, honestly. So I think that would have been actually you would have definitely closed out already. So boom to boom. So we actually ended up missing out on that trade right here. And then you would have added in right here, stop right over here. You still would have added into a winner and it would have went up. You would have been a little bit down in your position, but then boom. And if you were to hold it for like even more, like let's say this stop, 1 to 3, whatever, see if it gets there. So new range is forming right now. Put this at 1 to 10. So yeah, it would have delivered. And you would have gotten a crazy, if you like to hold your trades, you would have gotten even a crazier rundown. So if you're playing external range, like the range high to range low, just like that, then that's something you could do for sure. I probably should have looked for a trade after that, but I was like, oh, let me just look for another, go to the next day, go to the next range. But look, a high always forms, literally. High right here. You could practically just put it up here. Let me see. Boom, boom, boom. Okay, so this is the current range. And I feel like 50% is like, only smart if maybe you have the 15-minute bias or 5-minute bias. So you even have like a more of a longer term bias than the 1 minute. Like you're acting like your 1 minute is your higher time frame. Your 15-minute would act like it's your daily or some shit like that. Like your 1 minute should be like a hourly or something. Just a nice range that you can scalp from. You can get a little reaction from. Um, I actually really like the strategy. Right, my real strategy is this is like a test run strategy. So I'm gonna just wait for external range. See if I can show you an example of that. So we wait for external range. Notice I have these highs right here. So you could realistically put your stop right here and just be like, yo, let me just in case, you know, like not your stop over there. Sorry, you just have that mapped out. So I already see a 2022 right here. Market structure shift, boom, boom, boom. So I'm gonna sell my first short, or oops, wrong one. Right here. So I usually do only 100 for right now. It's just easier for me. So 1 to 2. So that TP will not move. So I'm gonna try and add into my winners. Boom. Accidentally went a little too fast. So let me see. I'm gonna add one more actually. And then this should be 100. So it's not. So I'm gonna add another one. And I think I could do another one as 123. Okay, that's fine with me. So look at that, 419 now. The TP doesn't move, the stop loss moves. Let's say you even like on the second position. After a winner, you go from 100 to 150. So you're like, let me take a little bit more risk. And this is just wiggle room. So look, another sweep down. And you could go and be like, all right, let me take another position in. Let's say, just for example, I'm going to keep this because I usually go like, unless it goes really like OD back, like up to here. Yep. Okay. So my stop loss saved us. So if we do get actually no, it's not a market structure shift right here. But it is like some no, it's not. Okay. So let's see. So we have a swing low right here. So let's see if we take it. Okay. So we take it. I wanted to see a fair value gap here. I was going a little too fast, but ends up taking myself. So even if you would have missed out of the other one, you still would have ended up ahead of right here. So we could do one more example just because I like this is fun for me. So we got another range right here. So we're looking for a sweep. Boom. 15-second chart. So it looks like we went down, and then since we're in the minute candle, it went down and stopped us. Like, not stopped us, but it looks like the first entry you would have really had would have been over here, the only fair value gap. So let's say I just buy right here because it looks like it's good enough. Because like, look, this is a market structure shift right here. Boom. Market structure shift kind of right here. Swing low, high, displacement, and then the only fair value gap in that range is right here. So you would have been long right at this fair value gap. So it's going with my rules. So I like it. And there's some displacement here. You can see it. All right, so we drop down, we lose. Let's see if we get a crazy displacement. All right, so this is not like the cleanest chart at all. Even on 30-second, it's like not super clean. See, so I was like, oh yeah, let's see if we get another crazy displacement. But we didn't. So I just ended up leaving the charts. I was like, yeah, I'm not doing this. I'm not gonna risk more P&L, right? So let me pause this, go to the next range. So next range right here, I can see that this low is still intact, so I would love a sweep. All right, looks like we're going for this high right here. And looks like we might get another hourly rotation over here. So we have a couple hourly rotations stacked together or highs. So now we're looking 15-second. And we're already like after the market has closed. So should be interesting to see what this does. A little choppy. And then we get a nice little displacement down. So I'll take a short right here. Again, I like to add into my positions. No real like set volume imbalance, but let me go a 30-second chart, honestly. So boom, this is like kind of the first fair value gap. Goes up, closes, respects this fair value gap. Once goes up and fills it again. Goes up and hits this. So even though I wanted to enter into the loser, I'm just gonna let it rock. I'm not entering more positions in a loser. So now you see it going down. See this wick. I'm like, okay, now this is what I'll add into. It's a winner. So you can even add like right here. This is 150, right? We made the rule that we would want to add into 150. So we can even keep this longer stop just because we are after market. So boom. Let's see if it goes right above here. Then I'll enter it again. Make my stop over here, 150. So boom, 150. And since we went up like this, I'm not gonna enter in more until we drop down a little more. Enter in one more contract. All right, I wanted to enter in a winner, not in a loser. See, I don't care if my stop goes down. I just want more validation, thinking it's gonna go where I want it to go. You see, so it's like I would have bound to have lost, which is okay because you have random distribution of winners and losers. But overall, the market goes so. If you like this framework, let me know. Obviously, I'm not gonna go and back test until I get a crazy profit because you see how time consuming this is. But if you guys like the full back test, if you guys like this model, I'm only really gonna be showing two models. It's gonna be either this, like super hyper scalping, or just random 2022 stuff. Ugh. All right, man.